There was a risk-off mood among investors at the end of the week. The Australian share market was caught up in the retreat along with the Australian dollar. After a tech sell-off on Wall Street, it was the local tech, healthcare, energy and industrial sectors that were the biggest drags on the market, which is in the middle of reporting season. By the close, the All Ords lost 1.5% and the ASX 200 index fell 1.4%. One standout was AMP. Its shares recovered 9% after losing a third of its value on Thursday on account of falling profits. Data centre NextDC was also a major gainer, as was Origin Energy after its half-year result impressed. On the way down, the shipbuilder Austal posted one of its largest drops in 10 years after downgrading its earnings outlook. Nick Scali's half-year report has also disappointed investors, as has Cochlear's results. Despite Friday's losses, the local market booked a strong gain for the week. The ASX 200 index and the All Ords were up over 2% each. And the Australian dollar has come off its recent three-year high to just under 71 US cents. Despite the Australian dollar losing its edge at the end of the week, it has surged around 6% against the greenback this year so far. Hawkish comments from the RBA have supported the currency's gains, but ANZ's head of foreign exchange strategy, Mahjabeen Zaman, says it's not just the interest rates outlook pushing up the currency.
Look, I think there are a host of drivers. Of course, the RBA recently hiked, and they're the first in the G10 complex to raise rates. And this comes at a time where the Federal Reserve is looking to ease. We're expecting 2 rate cuts from the Fed this year. And as a result, this is one thing that's helping the Aussie, but there are a whole host of other factors. Number one, we've got the Chinese yuan that's been gradually strengthening. Now, the Chinese yuan is positively correlated to the Aussie dollar at the margin, so a bit of impulse coming from there. At the same time, in 2025, the euro dollar was the anti-dollar proxy. This year around, it does look like, the geopolitical tensions around the US, Europe, have increased at the margin. So maybe Aussie, Australia is a little bit isolated from all that geopolitical uncertainty that's coming into play. And maybe that's been supportive as well for the Aussie.
Well, let's dig into that US dollar story. I mean, that Sell America trade has been talked about quite extensively. Is that going to continue into 2026, do you think?
Look, in 2025, U.S. policy uncertainty was the number one driver of a weaker USD, and we expect this to continue going forward. Along with the Fed easing, overnight we have seen the Congress, the House has come out to vote against Canadian tariffs. So again, there's policy uncertainty. Now we've got the Fed chair nomination wash put through, but there are people in the Senate Banking Committee who are looking to oppose that nomination until the subpoenas against Chair Powell are removed. So this noise will definitely weigh on the dollar.
In spite of all of that noise, what's the outlook for US interest rates then?
In the US, well, we do get CPI numbers tonight, but broadly we have been looking at the US data, and we have seen that disinflationary trend coming through in a big way. And if this continues, we do expect the Federal Reserve to ease this year. We're looking at 2 rate cuts. And of course, we do know that the Trump administration has been pushing for lower rates, and with the change of the new chair, maybe that might tilt the board to a little bit more to be on the dovish side.
And that would then widen the differential between Australia's higher interest rates and lower US interest rates, hence pushing the dollar up.
That's 100% right.
What's the Australian dollar doing against other currencies? It looks stronger against most of them.
Look, Aussie dollar has been resilient this year. When we look at it, when we look at the Aussie Kiwi, for example, now the RBA has raised rates. RBNZ is expected to be on hold, at least until December. That's when we expect them to first hike rates. When we look at the Aussie sterling, there's a relative policy divergence there. We look at the Bank of England, we expect further cuts coming from them, while we expect, RBA to be where it is after hiking 25 basis points. And then we think about the Aussie yen, which is most interesting. We've got the PM Takaichi, who just won lower house elections. We know she's got an ambitious fiscal agenda, and that fiscal agenda means more debt on their balance sheet, which will likely weigh on the yen. So Aussie yen likely to continue outperforming as well.
When it comes to the New Zealand dollar, the Australian dollar has hit its highest level since 2013 against it this week. It's got to be good if you're travelling there.
100%, I think so. But we do get the RBNZ meeting next week, and I think will be worth watching how the rhetoric is from the RBNZ. While we expect a hold at least till December, any hawkish rhetoric there, any change in terms of their OCR track will be impactful for the Aussie-Kiwi pair. So that's something that we are looking forward to seeing.
So the Australian dollar is up about 6% against the US dollar this year so far. Where do you see it heading this year?
We think the Aussie-US is likely going to end the year at 73 this year.
Mm-hmm. What does that mean then for the economy, for consumers, inflation?
At least for us who travel overseas pretty regularly, it's going to be a little bit cheaper at the margin than it was before, given the stronger Aussie. But also, imported goods are going to feel cheaper for us. And this at the margin may be a little bit disinflationary for us as well.
The Australian dollar hasn't performed that well until this year. Can you give us a bit of a flavour about how the Australian dollar has done so far this year? I mean, is a 6% rise typical?
No, not after the last couple of years where the moves have been pretty lackluster. And I think one of the key drivers was that we were generally in a pretty low interest rate environment. Now, when we look back to, several decades ago, we used to have high interest rates, and that used to attract foreign investors into Australia. We also had the mining boom. Again, the dynamics of our economy has changed more to domestic focus on the domestic driven. And so I think that's why while we do see the Aussie moving to 73, if we are thinking about an 80 or a 90 where we used to be a couple of years ago, I think that's a little bit hard to see at this stage.
So what is attracting foreign capital here? Is it just high interest rates, sort of stable government relative to what's going on geopolitically?
Yeah, look, I think we have a AAA rating. We've got a solid balance sheet at the government level. Our debt to GDP is right around that 40%, slightly under 40%. Now, when we compare this to economies where, the US, for example, where they've got the, one big beautiful bill coming out, spending $2.3 trillion now a year, that's a lot. And I think that's going to weigh on the currencies as well. Similarly, Japan, UK also face high fiscal debt as well.
Mahjabeen Zaman, thank you so much.
Thanks for having me.
This week, the nation's largest bank, CBA, reported a 5% lift in first half net profit to $5.4 billion, thanks to strong growth in lending and deposits. I spoke to CEO Matt Comyn and asked him about how AI will shape the economy. He says Australia should be looking to adopt the benefits of the disruptive technology.
I think it's a technology that inevitably is going to have, a pretty significant impact, certainly over the long term on a global basis. And it would be remiss of Australia not to be thinking very carefully about how to best adopt it so that the value of technologies like this are distributed within Australia to Australians.
Also this week, the Reserve Bank governor was forced to reject an accusation she's gaslighting Australians about the state of the economy. Michelle Bullock was fronting a Senate committee 1 week after the RBA's first rate hike in 2 years. She faced an abrupt exchange with National Senator Matt Canavan.
Senator, I take exception to that comment. I am not gaslighting anyone.
Let us speak.
I have said that there are certain aspects of the economy which are doing well, and one of them is the labour market, which is positive for people. Now, I understand that some people are doing it tough. I do understand. I get letters and I read them. But that is not to say that you can't recognise that there are some parts of the economy that are doing well. And the labour market, I think, has been a really positive thing for this country.
Australia Post wants to increase the price of a stamp by 9% from $1.70 to $1.85. It's asking the consumer watchdog, the ACCC, to approve this as it battles falling margins on sending snail mail. Australia Post is making the case that fewer than 3% of all letters are actually sent by individuals, so it will be mostly businesses and government agencies paying extra to send letters. On top of that, Australia Post recorded a massive $230 million loss in the letter business in the previous financial year and says the number of letter deliveries has fallen back to where it was in the late 1930s. And that's finance for now.